There is a substantial risk of loss associated with trading Forex, binary options, stocks, or equities. Only risk capital should be used for trading. Trading binary options is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits or will sustain losses. Before trading binary options, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading binary options is appropriate. Investors who trade binary options should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading binary options is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria chat room constitute a solicitation or recommendation to buy or sell binary options.
We're going to look at our news. Saturday, we had a great session. Really hit the basics of everything since the market was closed. Being that we are now at the end of the month and the very, very beginning of September, we do have some things later in the week that we noticed on Saturday that's coming up that we want to be aware of. Now, again, this strategy is based on higher time frames. It takes about 15 to 30 minutes a week at most to manage once you know the strategy and understand the strategy, I should say. I pretty much spend 15 minutes at most, maybe look at it and glance at it maybe a minute or two a day. And I'm looking for key things. And as we go through and you grow, you'll know what you're looking for as well. So we're seeing some red folders here that we want to be aware of, especially Friday. Friday looks like the big one. But we do have some Wednesday news as well, so OPEC. And with the hurricane coming through the Texas coast, or Gulf Coast in Texas and Louisiana, Mississippi, that may have some impact on some oil pricing as well, with supply being cut. So let's go ahead and jump into our charts. Again, what I normally would do is I'd look at my positions. Again, I don't normally trade all these pairs, but I'm in a demo account. And for education purposes, we trade as many as we possibly can, just so you guys can get the feel of it. The strategy works best with certain pairs, and we'll go through those later on, but we want to practice the strategy overall. I do scale in. I like to scale in. We'll talk about that as well. But if you're looking at overall, we're doing really well. Overall, as far as where we've come from, even from Saturday, our Euro Aussie is starting to turn around for us a little bit. We'll look at that first, and we're going to dig in a little bit more on the pairs tonight since we dug in the fundamentals more on Saturday. But if you have questions about what you're seeing on the screen, make sure you put it in the chat box. Al or myself will be able to kind of explain what you're seeing, and I'll try to do the same thing because I can't tell who's actually in the room because we haven't seen names. I see AU. That just reminds me of gold, and R. So that would be cool if it was gold. So let's go ahead and jump into our charts and look at the Euro Aussie first. So we went long, aggressive entry here, moderate entry here. I normally like to have 3 entries, and actually this was a moderate entry. Our aggressive one would have been up here. However, the position didn't look like it was ready to take an aggressive, and I didn't like what I saw. I use speculative sentiment index, which is a contrarian type mentality where we know that most traders lose money, very few break even. And then you have an even smaller percentage that are making money consistently. So we want to be opposite of the crowd. So if the crowd is majority short, which is what this is telling me, I'm looking at the FXCM SSI. It's showing a 1.659. I like anything over 1.35, 1.4 to go. This is telling me I should be long the Euro Aussie. It's telling me that majority of the traders that are trading this right now are short, which if you look at the trend recently, we've been going up since about March, and people are losing their money. So when we're on the right side of the trade, usually what happens is SSI will tell us what side of the trade to be on, and it usually aligns up with the trend overall, even in the big picture. So when we look at the Euro Aussie, there's really no position for us to get in, but we marked this moderate area. So if we happen to miss it this first time through, it did come back down, right down to our fib number here. And now it's starting to bounce back up. So we are really kind of in a wait mode. We got our limit order for our targets right up here. We have our secondary target here. We have a secondary entry waiting to be hit at the 50, but it doesn't look like it wants to do that anytime soon. But we're going to leave it alone. Again, lots of set and forget. What we do is we come back and check and see how things look. I also pay attention to the weekly. Weekly, everything's still plugging along just like we thought it would. And the monthly. And not a whole lot of noise that we have to worry about. Just for clarity and making sure everybody understands what we're looking at, we'll look at a couple. Let me go to a chart that we haven't done anything with. And I probably don't trade it very often. Matter of fact, I know I don't trade it very often. And let me just explain to you what you're seeing. I'm going to go ahead and I'll hide this one or turn it off. And we'll explain to you what you're seeing so we get a basic understanding of what you're seeing here. Let me go ahead and let it load up. And that will give you clarity as we move forward into our pairs that we're actually going to analyze tonight. We're going to look at the ones that we're in. So basically what we've got here is a tool called Atlas. On our tool, it's on the FXCM, it's called SRV1, but we call it Atlas. And what Atlas does is it finds key price points, and we identify them with blue, green, red, and blue. So we're looking at this price area right here as our major playground. This would be considered low in the curve. We want to be, if SSI says to be long, this is a good area to be at. This is major resistance up here, so we want to make sure at least one of our targets is before them. But then we want to go a little bit tighter. We want to pull in and draw into where we really are with this pair. So what I like to do, since this is CAD Swiss, if you want to make note of this particular website, you can. This is another platform that provides SSI information based on their traders. And so what I like to do is I like to double check. This one's pretty much one I would stay away from because we're 50-50. There's no clear direction at least as far as the IG. So let's just look at what we got on the chart and see what it's telling us. Yeah, we're pretty much locked sideways, and you can see that even back in here is probably back in 2018. We pretty much had a nice drop here, but then now we're back sideways again. So there's no real clear direction. We are coming on when price is below the green line. That tells me that's a place of resistance. So it would not surprise me if we come into here again and then fall away. But what I like to do is I like to have my Atlas tool on, and then what I like to pull in is other key price action places. And I do that by pulling in our retracement. Every platform has a retracement tool. And what that tells me is price points that I can expect a hesitation, a move away from. Nothing magical. Everything we do in the Hawkeye swing session is very mechanical. If it doesn't fit, we don't get in. Right now, I would have been, if it told me to be long, I'd have been long here, right at the 76. Okay, I'm going to clear that off again. But I also have another tool that I use to give confirmation as well. So I have confirmation with the Atlas tool, but I also like this tool, which we call Sherlock. If you're in Al's morning sessions, he uses what we call Hercules that gives us a momentum indicator, current and up to date. This tool gives us Sherlock, which is a price, institutional price movement. It's analyzing move away from certain places and the amount of time it's spent there. So when we look at this particular area, pink zone, we have one candle in the base, which means it moved pretty fast out of there the next two candles. This extended move cannot be done by you and I, retail traders. This is somebody else to be able to make that happen. So this would be a good area. If I were long, I would be making sure that I was out of there before them. But I also can look here and squish it up. I love squish and squash. If I had a bias on this thing, I'm thinking down. But because the SSI doesn't give me a clear indication, I'm staying away from it. If you look at US oil, it looks like it's poised to go up. S&P 500 is poised to go up. Let's go ahead and check out the Euro Yen while we're sitting here and see if I've got that even pulled up. I don't. So let me go back to one that I don't trade the CAD Swiss very often, so I'm going to get rid of it. Once it loads up, we'll talk about all the other positions that we have. Again, if you have any questions, make sure you put them in the chat box. I don't want to go too fast. I am recording this. This will be uploaded into our Hawkeye for those who want to watch it again, because I do have a tendency of talking pretty fast. But I don't want to not give you guys an opportunity to ask questions either. I want to make sure I pay attention to that. Euro Yen, here we go. I don't trade the Euro Yen very often, but we want to definitely look at it. Okay, let it load up. And we got our Atlas tool. Our Atlas tool automatically plots lines for us. Now the yen pairs are a little bit different. We have to play them and be a little bit aware. SSI is not. SSI can be found through that website Did I show you the IG website? So let me go back over there while we're thinking about that. Let me go ahead and put this in the chat box for you guys. All you have to do is change the pair that you're looking at for this particular one. And you'll have all the SSI for the brokerage of IG. Now, the tool that's on FXCM, it is free as well if you're using FXCM, but FXCM cannot be used in the United States. I'm using a demo account, so they've allowed me to do that. The Atlas tool, on the other hand, are going to be a tool combo. We're going to, here with Hawkeye, we're going to pile all of them into one extension piece for you guys. And you'll be having access to that shortly, we hope. So what we've got here, automatically plot, and you got to understand yen pairs are very, very notorious for being on whole numbers. So you'll see the green is a very, very strong area. Blue is going to be a strong area. And historically, we can look back. There's nothing magical here, guys. And we're not looking for exact price. But you'll find that historically, this blue line has been where a major player has been. You can see right here, red line's been a major player. This one came through the green and couldn't close below it and pop back up here again. We saw it stop here. We saw it stop here, broke it, came back, retested, came back down, broke it again, retested. You can see that this is key point. That's a 120.75. And I will tell you from my historical background of my experience that most brokers, governments, institutions are not going to be buying something at 126.39. They're going to be going 126.25, 50, 75. They may go down to the dimes, 126.10, 20, things like that. But rarely do they, bankers don't care. They're going to be waiting for you to take your money. But I want you to notice here on this how it came up, went through. Yeah, we had an overshoot. Then it fell away from the red because red represents resistance. Came right back to the green, popped back up, came back to the green, popped back up, finally broke. And now I think we're going to kind of want to peter out to go down a little bit. It looks like it wants to go down, but where's my euro yen here? Euro yen says to be long. Well, this is not a great place to be long. You're high at what we call high in the curve. So what I like to do is I want to set my parameters for my set and forget. Traders are notorious for buying when it's high priced and selling it when it's low. When in everything else in our lives we want a discount. We don't do that. I want you to notice here what we're really the perfect scenario places to be is the extremes. That would be this area right here to be long. And currently, let me get that color so you guys can see what I'm talking about better. This is where I'm looking to be long conservatively right here. Sherlock identified a price point that is institutional. I really like this as my conservative one. We'll talk about that. But I really like this one as my moderate one because it does give me enough room to make my first target's usually between 70 and 85 pips, 65. It just ranges depending on what I've got going on and what I'm trying to accomplish. But I really like this one right here. And so what I would also do is be aware that until we have a close above here, it's going to look like this. Pull this here. I do not want to be long in here. Okay, at anything, I'm going to be short. I would not be against if this happened to flip. I don't ever trade against SSI. I don't do it. You could if you want to, especially on lower time frames. If you think this is a good move from here down to here, that's a pretty good bet that that's going to happen. It's going to come up and it's going to retrace and may continue up. I wouldn't stay short long for a very long time, but there's nothing saying you can't go from 130.72 down and get your 70 pips and go down to 130. You can do that if you want. I just choose not to. I'd rather be right more often and more conservative than go counter trend, counter SSI. So anywhere in here I can do whatever SSI tells me to do. Anywhere in this black area. Obviously the green area is a good place to always go long. But I like this 50 area. So what I like to do is I like to come in here. And I cannot take a long unless it's below this 76 because I haven't had a close recently above the green line. But I don't like it right here. It doesn't look pretty to me. And if it's not clear and very obvious, I don't do it. So I like that area right there. Obviously, that's a good area for me. I would not be against coming, and this is all pure price action, Coming in right here at the 38, which is actually 128 as a whole, I'd bring it down just a tad. And then my conservative extreme, I really like this area, somewhere in this area. And I can make that even bigger if I wanted to. That's my line in the sand. So what I like to do is I like to do multiple time frame analysis. These daily charts are great. Daily, when you have a strong move away, you have a pivot, one candle in the base, and an explosive move out. This candle is an extended candle that qualifies under the Sherlock tool that I've set up for extra strong. And by the way, I usually like to do strong on this one. And you guys can set it to wherever you want once you get it. I usually on swing, I do strong. On my day trading, I do extra strong. And so I want to see if that still has a picture for me once I push that in there. It changes a little bit. It may not. I like this area right here as a short though. Okay, so yeah, it doesn't change much, but we did add a few more institutional prices to where we can clean this up. Notice this nice green line or green zone right over the blue. This changes my perspective just a tad. I would play it like that now. Just a tad. Now, I like to do multiple time frame analysis. Now, when I squish and squash, there is no real clear direction, but it seems to me we've got some walls to fight. So I definitely don't want to be jumping in yet. Okay, but I would have no problem. This obviously be aggressive. I would need to make sure if I chose the aggressive route that I can get 70 pips out of that. So I would have to measure out right where it's at right now. Now, if it touches the green line, I'd come back and do it. But if it doesn't, it just drops from there. I probably wouldn't get into this trade because it wouldn't quite give me what I wanted as far as distance. This one definitely would give me what I want and a bigger picture too. So let's look at multiple time frame analysis. What I like to do is I mark up my charts on my daily, no matter what. I mark them all up. I don't ever use these tabs over here to see what I want to see. I use my tab in here to go down to the 4 hour. And what I'm looking for is with those circles that we drew, those aggressive, moderate, conservative circles, I want to see if there's other Sherlock zones inside of them. And if there are, they qualify for me. So let's squish and squash. Yeah, this is going to be a beast to get through. So you don't want to be long right here. This is going to be a beast. But notice here, I have two zones inside of my first aggressive. Level on a level here. I would be more than happy to bring this one up to right here. It's a little bit more aggressive, and look how nicely that is. So on a 4 hour chart, I've got all three going. Now the higher for me, the higher the time frame I can make those three happen like that without doing too much adjustment, the better the area is. Because bankers aren't on a 15-minute chart, I can promise you that. Oh yeah, this is a good wall. Good, nice, solid zone there. And because our stop will be further away, no problem there. Nice zone in here. We could get a little bit more aggressive if we wanted to with this, but I really like that fib number sitting right there at the one, just call it 127. Okay, so these are all three on a 4 and 6. They are ready to do a set and forget if I so choose, but I always like to confirm it one last time on an 8 hour as well. That's a personal preference. I usually like to have at least two, but the higher the time frame, the more consistent I'm going to be. And we pretty well nailed them. We've got this one pretty well done. Nice solid 8 hour zone right at the 61 and the 50. That's all the same area, key area. This one's right at the 38, which is again not rocket science, all mechanical, and this is sitting right where we want it to be at the blue line. So if I was really happy with this trade, I really liked the European yen, or the Euro yen, I would be definitely jumping in. And that's how we would do our normal analysis of a pair. Now, again, I don't trade all pairs, but I practice with them all. That's why I like to get on Monday nights and Saturdays and just play around with anything and everything to see how they react, to learn their personalities. So let's go ahead and do some management. So we've already checked we're going to check our Euro Aussie one last time, and then we'll jump into our Aussie yen. So let's jump over to Euro Aussie and see if there's anything that concerns us about this as far as our stop. Our stop, I like to have my stop long ways away. And the reason being is I don't trust too many brokers. I don't want to be stopped by a pip and have it turn around and go my way. But I never like to have the system stop me out. I want to do it myself. I like to get in and out myself. So if the picture changes, then I make the decision to remove that trade from a live trade. I don't let the system do it for me. A little bit of a concern here. We got level on a supply level on a green level. But if we look at our Euro Aussie, we are still 1.6. I feel like the trend still is going to be up. So we just wait, do nothing. So then we go to our next pair. And this is why I only take 15 to 30 minutes a day. Or not a day, but a week. And really what I'm looking for, guys, is right here. If I see a major number, like this 128 is not major. If I get around 200, 250, I want to see what it looks like on the picture. But this is nothing. Okay, so I can quickly look at this during my day on my phone, and I can easily see that, okay, we're okay. As a matter of fact, we're making money right now. We've got a good profit happening for the day, so we've had a good day movement already. I look at that, but that's not a real number until it actually hits target. So it's kind of like drawdown. Drawdown's not a loss until you actually hit a stop loss. So let's go ahead and look at our Aussie yen while we're sitting here. I definitely like talking to adults compared to third graders. I like third graders too, though, so I can't be too bad on that. Okay, so we are, if I'm not mistaken, we are short on the Aussie yen. And if you notice this number right here, it says 1.2835. That by itself is not a complete picture change, but it is slowly eroding. So I like to, when it gets closer to that number, I like to jump over to that IG and see what IG says, just to be safe. Because if there's a slight picture change, I need a couple other things, but I want to be aware of it if it looks like it's getting closer to that 50%. See, this one is conflicted now. One says to be long, the other one says to be short. So I need to be paying attention to this pair a little bit closer over the next few days. And let's look at where we're at as far as our short. Let me move this out of the way. Sherlock's got a lot of longs sitting here, but we're coming up against some key areas of supply as well. Now, I entered an aggressive move here. I entered my moderate. It moved away. It came back up over the weekend, but now we're having this green line. My last line is going to be where my circle's at. If this moves up tonight, I will check tomorrow, and I possibly could put my last position in. It will be my largest. That would also allow me, if it does go up in here, I would hopefully have my target down here. If I'm able to get 100 pips from that with a position size, it wipes out all the losses of my previous two positions, and that's what we're looking for. So I'm going to watch this. It's even changing right now. It's 1.27. It was 1.28. I have a feeling this thing's going to be a possible booger. We may take a loss right up in here. If it starts blasting through with strong candles like this, then we may just go ahead and take the loss, move our stop loss. Our stop loss is way up here. Okay, again, we're going to manually get ourselves out. But look at the wall that it has to go through. Let's just say I wasn't paying attention for a couple days. It's going to take a incredible move to get through all of this without some sort of retracement. Can it happen? Sure. But then we can look on the long side and see the same thing. We are in a pretty much of a sideways pickle here where we have even. So not a great trade to be in right now, but we did it for demo, and it's a great way to trade manage. So I'm not in it in my live account, so we're okay. Aussie CAD, kind of sitting in limbo land, it looks like. Let's see what we got on Aussie CAD. I don't think we looked at that one. Aussie CAD is not shown on our chart here. I have to go back to my IG. While it's loading up, I'll go get that and see what it says. And imagine we're going to have a move on this because of the oil. So 51% are long. That is really not that much. I like to see at least 53, 54 before I really want to get in. But it's telling me to be short. If I'm going to be on any side, it's telling me to be short. And when we look at it on the charts, it's telling me to be short too. So when we squish it and squash it, we will see more pink than we will see an orange than we see green. We can also look at a big picture here, find out where it's at. This is why you wouldn't jump in. You're in a weekly demand area identified by Sherlock. Okay, doesn't mean it can't move further down, but I would wait a little bit. I'm already short up in here. I like my short. Definitely like my short. This is a weekly. We have a pivot, drop, base, and drop. We hopefully will see this thing move away. I don't think it's going to come all the way down, but look at how it reacted to Sherlock's zone. Pow, and gone. So price action is key down here. What's down there? 82.50. 8,000 at 82.50, which is your last quarter. Okay, so big picture stuff. I'm okay with hanging on to this thing for a little bit. It may dig up into the 61 and 76, but I'm okay with it. Stops above here. I may decide to add to the position if SSI will hold. I would have no problem adding to the position up in here, right at the 76. So I'm going to go ahead and mark it for maybe next week. And that's my analysis for Aussie CAD. Let's see what we got. What else? Good morning. That's so strange to hear. Good morning to you too. Aussie CAD. Pound yen. Pound yen's been fun. We got 2 pound yen. Let me go ahead and get these in order so we can see them together. Pound yen. We have almost a break-even trade. That's a good sign. Usually when we hit our moderate, that's a good sign for a continuation in the trend that we're going. And we are long. So we had identified our aggressive. And guys, I do aggressive because I'm aggressive. If you don't feel comfortable doing that, I like being in trades. I say it every week. I love being in trades and managing. Some people rather not be in trades. I like it. But we identified this nice moderate area. What's really cool about this and gives me a lot of confidence that we're going to continue up to our target is that we got in before Sherlock identified a brand new institutional area, which just so happens to be right where our moderate zone is. That gives me confidence. So if I missed it this time, I would have no problem coming in on this green line. That's our fib number, our Atlas tool. It's on it. This is a great area to consider going long because you can get your 70 pips for your first target. I'm going to wait and watch this out. Notice our aggressive, our moderate. If I was smart and paying attention, I mentioned this Saturday, I didn't see this happen. I didn't pay attention that day. I was at school, but we marked our conservative area. It came right down to where we thought it would come at the 76, and it's moved up. If I had gotten in there, I would have 2 wins right now, and there would be no loss left over here. That's how we end up with an 80+% win ratio, and that's what's happening. Yeah. It's going to be good night shortly. But yeah, so if I was paying attention, I would have had ridden this one up a little bit more. We probably would consider, maybe taking the position off and starting over since we've got this new one. There's all sorts of things you can do. The cool thing about the strategy that we're using tonight is that the entry and exits and targets are very mechanical. There's no hypotheticals really. It either is or it is not. Where the subjectivity comes is the trade management. And that all comes down to your own personal. As Al says, it's the BTE indicator, which is completely free. You can get that anywhere. As a matter of fact, God gave it to you. It's called the Between the Ears, and that's usually where traders fail. It has nothing to do with bad entries, bad exits. Now, we do have bad entries from time to time, but most of it comes down to trade management and not understanding how price action actually works and knowing where we can assume with these fib retracement tool and our Atlas where we can assume price will move, just like it did here. It gives us the confidence to stay in the trade long enough to let it do what it's supposed to do. And it gives us the confidence to know when to get out when we know we're supposed to get out. So the pound yen looking pretty good. Let's go to, let's do the U.S. Swiss, because that one's a weird one for me right now. The U.S. Swiss is a little bit weird. It's a little quirky. The U.S. Swiss is at 8.2. Now, Saturday, it was at 10. So we have a little bit movement down. I still think that it's in the short position. This just tells me a lot of people are long this pair, and which is really, really odd. But it is what it is, and we trade against retailers. Yeah, exactly. It's the least used indicator. The BTE indicator is the least used. We'd rather have bells and whistles and signs and wonders instead of using our God-given brain to trade. Because really, we're trading price. Price is the key. But you're really trading human nature. We know that buyers, when they see an extended move like this, buyers don't want to miss, and retail traders don't want to miss the move, so they buy right here, right into a supply area. They get stopped out, they get mad, so they go short, only to go right back into a key price point, and it goes long. Then they get mad again, and they decide, well, I got stopped out again. And then they see this big, long, extended move. I'm going to go short right here to get stopped out, only to see it go down. It's all right there. You can see it. So if you're one of those traders that have just as soon as you get stopped out, it goes the direction you thought. Be patient. Learn. That is a habit. There's something you're doing inside of your trading that's not allowing your trades to breathe. Let me clean this up just a tad because these drawings here could get confusing from Saturday. I left them alone. I should have cleaned it up just a tad. So what are we looking at? We got short here. We had price come back up into an area. I was really looking for the 38. I got in. I've got another entry sitting here, but it never triggered because I put it in after. This was Saturday's entry. I was waiting for it to come back. I think it's going to, but I think we're going to have it continue on down as well. 8.2 is a pretty big number. Now, when we look at big picture, that's another thing you want to consider. We're a long ways from this moving average, and Forex likes to come back to the mean. This is an extended candle. So wherever this thing exploded from, we want to make sure our target, and it's the 9,000, call it 9,000. But look where this fib number is sitting. This is an Atlas tool that's designed. And where did it stop? Right where it couldn't close below it. And it's right there for you. You don't have to think. And the best trading is when you don't have to think. Okay, if we really want to be honest, this pair has pretty much been sideways since 2012, pretty much. You had a big move here, but pretty much sideways. And now we have a little bit of a breakdown. And we've got, all sorts of things. But we've got some demand zones on the monthly. So we want to be aware of those. We got room to move up, to be honest. But overall, we're still doing what we're trudging along. So if it's not clear and easy, absolutely I can look at that. If it's not clear and easy, avoid it. You got plenty of pairs to trade. Trade the pairs that don't have a big expense to them. You don't want to have a big spread to them. You don't want to have a big expense because you may be in a trade for a while. Swap fees you have to be paying attention to, things like that. Let me see where we are on our analysis of these. We've done. The only one we haven't looked at tonight is the Kiwi US. Now this one was losing pretty good for me, which is normal. Doesn't bother me. We got in, and I want you to notice what happened. We got in here. That was our aggressive. We got in our moderate. Again, like the other pair, I didn't see this. It's the same look as we had the other day. This happened at the same time, but notice what it did. It came down to the Sherlock area and bounced out. It's the same picture. Our moderate is now sitting right where a fib number is, as well as now a brand new Sherlock area. So I'm pretty confident in this particular trade. We've got a little bit of a beast to get through here, but hey, we just got time now. We just need to let it have its time. So what do I expect from this? Well, if I'm looking at this, I see a rally, 2-candle base, explosive move. If this would have gone big, then we would have had a rally, another 1 candle, but this is not big. Sellers came in here based on our Sherlock. This is institutional. Well, what's here? The 61. My bet is we'll kind of wiggle our way back up here, clear this zone out, clear all the orders out. Any sitting orders will be gone. And then we'll bounce back down to the 50. Then we'll rise up and hit all of our targets on our way to 76. That would be what I would expect unless the government comes in and changes something. Okay? If everything goes to normal plan and ebb and flow of the Kiwi US, that's what we would expect. Okay? So very, very long. It's not a horrible trade. Little, again, I don't look to get in and out of a trade in a day. Sometimes it happens. Usually I'm looking for a couple days, week, maybe a month or two, depending on what it is. The key is I'm looking for longer targets. That's what I'm looking for, to ride the wave. So let me see if I got the pound Kiwi pulled up. If I don't, I will clear one particular pair and get it up. And we'll end with the Kiwi, our pound Kiwi. Since I don't trade it, it's going to be something magnificent, I'm sure. I don't think I have anything on the CAD yen. I don't trade. Yeah, I've actually been in trades 8 to 9 months, but it also is those trades that made 900 to 1,000 pips. And again, the whole strategy point is not capturing little bitty pits all the time. It's definitely a swing trading strategy for those who can't be on a computer all the time. Yeah, no doubt. No, what caused the hair loss was kids in elementary school. So let me go ahead and No, actually, I cut off all my hair right before we sang at the White House, believe it or not. Right before Christmas, and I should never have done that. It was below 32, and we were singing out on the mall Christmas tree right outside the White House, and it was some kind of cold. It was brutal. I should have waited a week or two. Love it here in Texas, not having it. So let me get our pound kiwi. Now, pound kiwi is a fast mover, so we want to be very, very careful with this one. You can tell it's been a while since I've looked at it. So let's clean house a little bit first and see if we can get a new perspective on it. But I can see something right now that I really, really want to show you guys. Hey, sang at the Sydney Olympics in 2000. Yeah, that was back, that was pretty cool. Summer Olympics of 2000. Great town. Let me hide this. Sydney's different probably now, probably sure. Especially with the COVID stuff. Let's remove this indicator. And let's clean the house a little bit. Yeah, Sydney was busy then too because of the Olympics. It was busy, pretty busy. It was a lot of people from all over the countries. All over the world, I should say. Okay, let's squish and squash. And I'm going to show you the value of the Atlas tool because you can see it all over this one. Again, we're not looking for exact precision, but I want you to take a look at here and here and here, how this bounced from here, how it resisted from here, resisted, bounced, resisted. And look at how many times we tried to get through this. But you can see historically how key these price points are. And that is huge for you to have confidence in. You have to have confidence in the tools. Now, these are not movable. They are exactly, if you're looking at 1.9639 on any pair that's not yen, on a daily chart, it's going to be a red on 1.9639. It does not change. Okay, that's the cool part. Very, very mechanical. So what do? First and foremost, it's not part of our SSI over here. So I want to know what side of the trade am I going to be on. I want to take the retail people's money from them. So I want to know first and foremost, where is Sherlock going to tell me to go? And where are the retail traders at? There is no doubt in my mind I want to be short. When I see a number like this, I am looking to be short and usually looking to be aggressive about it. So we may get a trade tonight. Matter of fact, we will get a trade tonight. Looking at where we're at now, I'm going to go ahead and set this up. I'm going to do one of two things. Now, I'm going to do the whole analysis just based on what I normally would do. First and foremost, I'm going to take my tools and stretch them out. I have a close below the red, so that means we're in this section now. A daily close below the red line means I'm in a new third. So guys, this is good stuff right here. You're going to see what I actually do all the time. I don't trade this pair very often, but this is a great example for it. I'm allowed to take a short anywhere in here. Could it be market? Sure. It doesn't have to be market order. You can wait. I'm going to use Sherlock to help me out. Where would I expect this thing to go? Number one, that red line is key. We're already a little late to the game because it broke, retested that line, fell away. It's came back once and it's fallen away again. But it's below yesterday's low. And so I'm going to go ahead and plan this here in a moment as a market order for an aggressive entry. And then I'm going to go ahead and set up my moderate. And then I'm going to set up my conservative. Now, I would expect this thing to come back down here again, maybe not quite make it up to the red, come to the 61, go back and overshoot the 76, hang around there for a while, then come on down to the 50, do the same type of ebb and flow in a 45-degree angle. I would expect that each one of these places would be a hesitation point unless a government agency or a large money person blows it through there. Where would I expect? Now, I don't have my target, but I'm looking back here. I want to be out of my trade, especially my first trade right here, no matter what, because there's nothing, and again, we're trying to do this without any major lagging indicators. There's no lagging indicators here. This is all price action only. So my first target would probably be here. If I'm getting out here, and it's already starting to rise a little bit and coming down, but look where it stopped at the 76. Stopped 1 pip short of it. So again, I expected this to come down, come back up, and ebb and flow. Could it come all the way up here? Absolutely it could. Look at these movements here. Just look historically how it's been moving. This is, and thank you for bringing this, Raj. This is a good one to go with this strategy. So here we go. We go into this look. We got this nice channel here. It's broken the channel right here. So if I didn't have any Sherlock help, first and foremost, I would be going aggressive here. Yes, it's aggressive. There won't be any Sherlock help there. But my moderate would be right here, probably right at this line, and my conservative would be right behind it. If at this point I'm wrong, my stop's still going to be up here. I'll have to make a determination. Okay, so if you're not aggressive, don't get in it. If you're waiting for moderate, that's perfectly fine, and conservative. But I haven't confirmed everything, and maybe I'm not real confident with my strategy. Y'all aren't real confident with my strategy. You need an extra tool to kind of give you guidance. Let's see if Sherlock can give us any help. Remember, Sherlock's going to help us identify institutional type numbers where orders have exploded away. And let's see what we got. Okay, that tells me a lot. It really tells me I don't really want to be aggressive right now. But it does tell me I can move this to the back side and this to the front side and do a level, add in here, and be done. Stop would be above here still. I would now probably wait to this to be my aggressive. Again, this is on the daily, so we're boom, 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 scaling in. You don't have to scale in 3 times. Al is creating a calculator that will help you calculate position size for 3 scales. Or 2 scales, however you want to do it. It's going to be available to you guys. But I like 3 scales. I like to get in a trade somehow so I can manage it. Now, this is a problem for me. I got to make sure I can get 70 or I won't take the aggressive entry. So let's just say I take it at the red line. I need to get 70. 70 is where? It's in this black area. Okay, I'm good with it. It's already been down to this area. The question will be is can I get from the red line to this line, and that's 120 pips. So I have clearance. So this one's gone. Once this candle closes today, this will be gone. And this is the only one that's going to be remaining. So a good entry would be high at the red. That's where I'm going to set my set and forget. But I'm going to do my multiple time frame analysis first. I need to see a couple more confirmations just to make sure. That's nice. That's nice too. This one's kind of weird. Okay, so we're looking for shorts. There is nothing showing me to be short here, but I want you to see again how even on the 4 hour, how it comes right down at 76, you can see even more precise. This zone is going to be a one I want to be aware of. Okay, so I need to make sure when I get in, I can get here and out before here. Because this one may hold for a while, and I don't want to be in longer than I want. So this one qualifies, we got the front end. This one qualifies, we got the back end. It's not beautiful, but it is there. It still qualifies. I think we're going to have a better look on the higher one we go. Let's squish and squash. Yeah, there we go. And again, I haven't seen this one, and we talk about, I think we're going to get a better one. It's because you get used to seeing this stuff. This one's going to be identified. The reason this one's not identified strongly is because there's too many candles in the base. I put 2. That's a very strong. This is 4 or 5, so it's not moving away enough. So, but I like this one right here. This one's still pretty aggressive. This is price action only. But look how far it went once it hit here. It went all the way down. Yes, it bounced up, but this zone is gone. Once this 6 hour candle is closed, this zone will be gone. And we go right back to where we were on the 4 hour, right back to where we were on the daily. Let's try one more, and then we'll set it. Yeah, here's a drop-based drop, but this is going to keep it from being a Sherlock area. It's just a large demand zone, but it's gone. Remember. Yes, we're working for MT4 and TradingView. That's what we're working on, getting them all set up. Yep, absolutely. That's what we're looking for. Yeah, this is a good trade. Overall, yeah, I'm not real thrilled with this being almost penetrated all the way. A lot of back and forth. But on a bigger time frame, guys, this is the 8 hour. If you put this on a monthly, I bet you, or weekly, I should say, I bet you there's going to, this one's gone. So that's not going to be it. It's going to be your dailies. This one's gone. This one's already chewed up. So we've got some room to go either up or down. But if I had my guess, down is the play. Drop base. This is kind of squirrely here because of that wick. But I would wait. So here's what I do. Because I am aggressive, I'd come in here. Oop, I got to do it just above it. I'd create an entry. And I'm not doing position size, guys, today, just so you guys know. So let's just take a small position, just for example's sake. I like to do this. You can pick your own number. Move it far enough away that you have to make the decision of when you're going to close. Al does a lot of scalping, and he uses very similar stuff, except he uses momentum instead of instead of SSI. So I'm going to go with 70. We do that every morning, and the recordings are done. We're going to start showing recordings of that as well, so you'll have access to all the Hawkeye stuff. Okay, so that's our first one. I'm going to show you, just for clarity, how far our stop's away. It's above the blue. We're good to go, but I'm going to go ahead, and I want you to notice where we're at right here. This is a wick to wick here. I am going to take it right at that wick. This is my next entry, and this is our second. This is our moderate one. I like to double it. That's what I like to do. Make sure it matches your position size, though. You need to make sure you're not risking more than, I risk about 3% per trade. Sometimes 4, but most of the time 3. And in this case, it's not much further, so I'm just going to put 120. See where it falls. Once I see where it falls, I may need to make an adjustment. I'm liking it. I'm going to go ahead and move it further down. Just a little bit above where it penetrated before. I'm going to bring the stop down a little bit more. And I'm going to go ahead and scale in my third piece. Now, I could take it up here if I want, but I'm going to take it right at the extension line of 97.90. That's my line in the sand. It's the last one. I'm going to add 40. I doubled that one up. I'm going to put 600 here, get it out of the way. And then this one I'm going to just throw out there. 900. Get it out of the way. Get it way on down here to where if we have a nice long trend, I need to find out, maybe a little bit too far. Let's go up in here, right before that area. That's still 557 pips. That's plenty enough for me with a nice position size. Once I clear the first 2 trades, I'll trade manage and trail with a stop. I will just trail it. I don't want to lose money when you don't need to. And we got plenty of room. And so we've done a set and forget, and we're ready to roll. Okay, and if it gets to be where it's too noisy, take one of your tools off after you get done using it. Because once you start putting orders in, it does get kind of messy. And you can't tell where your orders are at. Okay, so again, that's get used to using the tools and then clear off what you don't need anymore. I like to keep my Atlas for sure because those are my playground. Just like Al teaches in his 15-minute session. All right, guys, we're right at the 50-minute mark. What price again? We don't have a price yet. Al has a price, but I don't remember what we decided for our Hawkeye people. Al, are you remembering what they had set up for that? If you're still with us,
for the indicators,
for all the tools we're going to package together, how much did they determine we were going to do?
I believe,
was it $29?
If my memory serves me correctly, it was $29 if you have if you come into our room. If you don't come into the room, then I believe it's $59.
Right, something like that. And it'll be more. And it's going to be everything, guys. We're not selling them individually. We could, but y'all are already a part of the Hawkeye part. Outside of Hawkeye, I'm almost... I know that when we get it on TradingView, it'll be all separated. And you won't find them for less than $300 probably, is my guess. So Hawkeye has its benefits. So, I mean... There's a lot of time been put into these tools, so $29 is nothing to have your Atlas, your Sherlock, your Hercules, and our calculator, and I'm sure there'll be more coming at some point that will help us on our trading. So, all right, any more questions? Good stuff tonight. I've got it recorded, so if I went too quick, sorry about that. If I went too quick, make sure you go back and look at it. We will be doing another one Saturday, most likely, and I may jump into the very, very basics again since that was not recorded. So if you really want to dig deep on where these ideas for these tools came from and understand why they're so powerful, then Saturday morning will be where you want to be at. And I'll record it, probably do it 1 time, maybe 2 times, and then refer our newbies to that basics recording and that way we can really start digging in on our Monday nights and Saturdays to more trade-oriented stuff. All right, guys? Yeah, it's gonna be fun to watch. There's all sorts of, look at all the ones we got to watch to play. I mean, take a screenshot if you want. See where we are today and track it. Yeah, track them. I think our Kiwi US is going to be the one we're going to enjoy first. The other ones, you're into the month. We could be waiting out for a little bit of time on some of these other ones. The one I want to definitely watch is that Aussie yen. That one is a little bit weird looking right now. And I'm hoping it goes wrong, to be honest, because we're in demo. And the best way to learn is for the picture to change, and then I can show you what that looks like so you know what to look for when it comes to your time to determine if the pictures change. I like losing trades in demo for that very reason. Yeah, we have red folders. It doesn't normally impact us in the long term unless they make a financial policy change.
I will say, Brian, that British Kiwi trade, it had a 100 pip 1 minute candle.
Whoa, was that this morning?
No, it was like 5 minutes ago.
Oh my goodness, that's why we had that bounce. So was there some sort of news apparently?
Yeah. No, I didn't see any news though. It just did it.
Oh wow, let's see what we got. Hello.
And actually, what that did, that just set up for anybody that was looking at stuff. I didn't want to interrupt because you're doing swing trade, but there was a scalp trade that set up off of that, and it's pretty much hit target one.
I would think so if you were short.
Well, that was after the announcement. After that, whatever had happened.
This is what it looks like on a 5 minute, guys. Just so you show how powerful Al's session is as well. You can tell what side of the trade to be on with Hercules and the colors with Sherlock. You can pretty much tell what side to be on. And he teaches it great. So, even if you're not able to be there live, once it starts showing up, guys, you're paying for everything in the Hawkeye already. Enjoy everybody's teaching and learn a little bit from everybody. Everybody in Hawkeye has a little bit different style, but we pretty much do the same thing, if that makes any sense at all. There's not a whole lot that we do. And it goes all back to price. It goes back to we look at price action. That's what we're looking at. There's nothing magical about price action. It's going to happen. Remove that, get that out of the way. It's going to happen. Here's our Atlas tool for our 5. And what Al does basically is he goes down to the 15-minute chart, and he builds his framework. He plays his playground. Yeah, and Ronnie, that's exactly right. There's not, when you're right, you're right. You don't need a whole lot. I mean, now with swing trading, you're probably going to have a higher percentage win ratio because you're allowing it so much more time to ebb and flow. However, if you're on the right trade, you can take multiple pips and really get an income stream going with the day trading as well. And if I was a trader on this,
what do you mean you have a higher?
What was that, Al?
Ratio? What do you mean you have a higher win ratio? What are you talking about?
Well, it's a normal thing for swing traders to do that, except for you. You're probably passing me now. I would say if I was wanting to be a trader here, this would be where one of my places I would be a trader. That would be a moderate for me. My aggressive would be right here. And my conservative would be just a little higher. And that would be all based on Hercules. And I don't have Hercules up right now, so I can't show you. Yeah, Al and AP Live don't like each other.
No, we're talking to each other. We're on speaking terms.
There's a relationship happening. It's all going to get better and better and better, guys. It's going to get better and better and better.
But when you recorded this, is that your recording?
Yes, I'm having to use Screencast-O-Matic.
Okay, I thought that was yours.
Yeah.
Did I miss something?
Right, and the technology side of Auvoria Prime is working on the other piece now, and he didn't want to bother educators with it yet. So I said, do you mind if I record it? He said, no, I'll record it. I'll record it, and I'll send it to him. He'll edit it, and he'll post it for us. So if you have a Camtasia or Screencast-O-Matic, then you can do the same if you like. So, all right, guys. Well, that's all I have for tonight. He is trying not to, yeah, no doubt. He is trying not to throw it out for sure. It's going to be great, though. I love once the piece I'm looking forward to is the microphones being open for you guys. That's the piece I'm looking forward to.
Yeah,
because right now we can do base stuff, and we can really dig into our base and foundations. Once that's done, and you have a good core group of people come in regularly, that's when we're really going to start learning, and that's when we can start picking it and really digging into what y'all are doing correctly and incorrectly, or what your perceptions are. And that's what I'm looking forward to. So apparently I have an order on this already. Oh, this is from my order. Yeah, okay. Look where my order ended up, right? The blue line on a 15-minute. And we can control who talks and who doesn't on that regard. I would love to see 200, 300, 400 people in a room like this learning something this simple. But you can always talk. Through a chat, you can tell who's got something to share, that type of thing. That's not hard. I've had groups of 200 plus in a group at one time before. It's not difficult. If you can handle 40 fourth graders at one time, we can definitely handle 200 adults.
And most people are just sitting back, looking and listening.
Listening, learning.
People, the more comfortable people get, the more they're apt to interject and ask questions and show screens and things like that, which is really what this whole community is going to be all about, is to try and get people engaged and involved.
And it's guys, it's intimidating if you're coming in and you don't have number one, the tools. Number two, you've struggled in your own accounts. You don't have confidence. It's hard to go, hey, let me share my screen and show you what I'm doing. But that's where you'll get your confidence, to be honest. Because then people like Al and myself can look at it and go, okay, why did you do that? Why would you be there? What was your thinking? And usually it comes down to your BTE indicator. It usually has nothing to do with your trade. From time to time, it's a bad entry, but it usually has more to do with the fear of missing out or greed, that type of thing. Yeah, we'll talk about that. We can do that sometime. We need to have a special session on how we all met. That would be good. Yeah, chasing trades. Yeah, that's pretty much what it is. But again, it goes back to the BTE indicator. And
it's funny, Brian and I have been working together for probably 7 years.
It's probably 6 years. Probably closer to 7 now, Al, because I've been off the road. I've been off the road 7 years.
We've never been close enough to shake each other's hand.
Nope, haven't yet. But it's going to happen, guys. We need to get some people.
Close last year.
We need to get that blitz going. We need a Hawkeye blitz and get everybody to go. Is it Cabo San Lucas that they're talking about going to?
Cabo San Lucas. Yeah.
I'm saying let's load up and all go. Then we can all chat. I'm all in for that. I guarantee if I get on that thing and get blitzed and get people coming and joining Hawkeye, I'll go to Cabo San Lucas. I'll get out of third grade and take a week off. It wouldn't be a hard thing for me at all at this point. But yeah, I'm excited about what they're doing with us with Hawkeye. We've caught the eye and attention, and that's kind of a cool thing. Yeah, that's true. I agree. Hopefully, lockdown will be gone. We've had I have a student in my class today was diagnosed, and so they went and checked me out, asked me how I was feeling, and a couple other students. But I'm not too worried. All right, guys. Well, let's call it a night, and you guys stay safe.
Brian, do you have time for an 888?
I can do quickly. Yep, absolutely.
Okay.
Absolutely. Let's call it a night, and you guys take care. Make sure you jump in on the morning sessions with Al and Eva, and then we will be back with the swing sessions on Saturday. And if you're a person of faith, please pray for Pierre. Pierre had to take an emergency trip to Haiti for his family due to the earthquake. So he'll be back in the Hawkeye teaching session with our pre-market analysis here on September 13th. So keep him in your thoughts and prayers if you would, please, as well. And we will see you guys soon. Y'all take care, and God bless.
There is a substantial risk of loss associated with trading Forex, binary options, stocks, or equities. Only risk capital should be used for trading. Trading binary options is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits or will sustain losses. Before trading binary options, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading binary options is appropriate. Investors who trade binary options should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading binary options is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria chat room constitute a solicitation or recommendation to buy or sell binary options.